I'm going to spend $50 billion to create 51% of the mining capacity in the world, and I'm going to steal all the Bitcoin in the world and take down the Western financial system. First of all, there's no such thing as cryptocurrency. There are 1,000 cryptocurrencies. In other words, you cannot speak generically about cryptocurrencies. Jim Rickards hates cryptocurrencies. That's not true. I really, really dislike Bitcoin, and I'll tell you why. But there are cryptocurrencies out there that I think are very interesting and worth your consideration. I'm for it. I'm against it. Cryptocurrency means nothing. You have to talk about the specific currency. And I'm here. I'm showing Bitcoin, Litecoin, Monero, and Ether. By the way, isn't it fascinating how the graphical representation of cryptocurrencies is always a gold or silver coin? Bitcoin's gold and Litecoin's silver, Monero is both, and Ether is gold. And what are they trying to say? I think that psychologically what they're saying is, well, this is nothing, but if we pretend it's a gold coin, then someone will buy it. But I just find this a little bit of an aside. But no, it's the same thing is true with fiat currencies. You can't be like or dislike fiat currencies generically. Some people do because they just hate central banks. I understand that. But it's a big difference between a Venezuelan Bolivar and a euro. Big difference between a Zimbabwe dollar and a US dollar. So in other words, don't talk to me about cryptocurrencies. Tell me what specific one you want to talk about, and that's a more interesting conversation. I think it's really important because this field is so muddied. The conversation is so muddied. People not distinguishing between blockchain and currency, not distinguishing between different types of currencies, etc. I think we need to step back, take a deep breath, and be rigorous in our analysis and think about what we're actually talking about. There's no such thing as a blockchain. There are hundreds of blockchains. In other words, every currency, every token, every so-called smart contract, if you're using Ether, has a different blockchain. So there are at least hundreds, perhaps thousands of blockchains, new ones being created every day. So again, don't talk to me about blockchain. Tell me which specific blockchain you're talking about, because they're not all the same. And this is critical. The main difference, there are many differences in this blockchain technology, but the main difference is validation. Because remember, the whole idea of cryptocurrencies and blockchain and the original Bitcoin and what Satoshi Nakamoto came up with is that we're going to have a trustless system. We're not going to trust banks. We're not going to trust clearinghouses. We're not going to trust exchanges. We're not going to trust central banks. We're not going to trust anybody. We're going to have a decentralized system that a community can validate, and we don't have to rely on anybody in particular. That was the original idea. So the question is, what's your method of validation? And that's what distinguishes one blockchain from the other. So I've listed 4 of them here, but there are others. Proof of work, that's what blockchain uses. You know what the work is? You got to factor these, 87-digit prime numbers into prime factors. It's a lot of computer crunching, completely clunky, completely inefficient, non-sustainable. I'll talk about that in a second. But that's Bitcoin. There's something else called proof of stake, meaning this is what Ether is based on. You demonstrate that you have a certain percentage of the processing power, so you step up based on your stake. There's proof of space. Space is storage space on a hard drive, so I get to vote on the blockchain. I get to vote on validating the blockchain because I've decided to devote a certain amount of my hard drive to that process. There's a new coin called Space Mint. And then there's the Byzantine agreement. There's a version of that called the Federated Byzantine Agreement, which I personally think is the best, much more robust to some of the problems we're talking about, and there are others. But the point is, don't talk about blockchain. Say, okay, what's your governance model? What's your validation model, et cetera? And then ask yourself, is that sustainable? Is that robust? Will that resist an attack? Are your cryptocurrencies going to be stolen? These are the questions you have to ask yourself, and there are no generic answers. So I cannot emphasize enough. Coin by coin, I hate to use the word coin, whatever, token by token, blockchain by blockchain, be rigorous and ask yourself what's sustainable. Now, Bitcoin, Ripple, and Ether, and some of these other cryptocurrencies, not all of them, but the best known are going to fail. When I say fail, they're going to, Bitcoin might have a $200 value as a token for criminals. I think criminals and terrorists might find a use case at about $200 per Bitcoin, but they're basically not going to be anywhere near where they are today. Why do I say that? I don't want to make a claim without backing it up. The first point is they're non-scalable. Transaction times are slow. And then when you say that to Bitcoin people, they go, aha, the Lightning Network is right around the corner. Lightning's going to, we'll see. They said that about segregated witness. They said that about some of these other solutions. They don't seem to get community support. They keep forking the Bitcoin, meaning one day you wake up and there's 2 blockchains instead of 1, or whatever happened to that whole idea that we weren't going to have inflation and we weren't going to pull new cryptos out of thin air. But these solutions, you have to understand what the solution is. So what they're saying is nobody has a solution for the inherent slowness, clunkiness, non-scalability of the original Bitcoin blockchain. There's no solution for that. So when you hear about solutions, what are they? Well, what they're saying is take a bunch of transactions offline. So everybody in the room could form a group, or let's say every coffee shop in Brooklyn, New York, every coffee shop in Vancouver could form a group. And all the people who want to buy coffee would join that group. And we would agree, so we're in our own little bubble over here, and we would agree that all of our Bitcoin transactions among each other don't go on the blockchain. They just get settled in this sort of separate cloud over here. And then we net them out. So, I pay you 5 Bitcoin and you pay the person next to you 4, and he pays the lady in the back of the room 10, and she pays me 7, and we net it out, and then periodically, and it could be daily, weekly, monthly, or whatever, we net all this stuff out, and then we take that net and we put that on the blockchain so that the amount of transactions that have to go on the blockchain is greatly reduced. That's true. But what are we doing? We've created our own network. I got to trust the coffee shops. How do I know they're not going to steal my money? In other words, it's only a solution because you're completely negating the original idea. Oh, well, sure. If you want to tear up the original idea and start over, that's fine. But don't tell me you're adhering to the idea of a decentralized, trustless network, because you're not. All you've done is create another network. Somebody, I get trolled on Twitter all the time. People tell me I'm an idiot and I don't know technology and all that stuff. And then my more sour moods, I tell them I was coding before they were born. But as far as some of these things are concerned, somebody said, well, you don't understand payment channels, and I actually do. And I said, yeah, I understand payment channels. We had those in the 50s. They were called party lines, which is, you pick up the phone and someone's talking, you got to ask them to get off the phone so you could go. In other words, there was an AT&T network, at least in the United States, but other people could jump in on this little side thing. That's all it is. These are party lines. So that doesn't work. Non-sustainable. The energy usage to solve the problem and make the proof of work in Bitcoin is now greater than the annual energy output of Ireland. Imagine taking all the electricity used in Ireland in a year, and that's how much we have to use to crunch numbers. By the way, every applied mathematician will tell you that prime factoring is a trivial problem. It's like an uninteresting problem. But it takes a lot of computing power to do it because the numbers are so big and the possibilities are so great. So we're just wasting the entire electrical usage of Ireland. In a few years, it's going to be the entire electrical usage of Japan. Who in this room thinks that governments are going to allow Bitcoin miners to use as much electricity in a year as the entire country of Japan, the 3rd largest economy in the world? That's not going to happen. It's not going to happen. It's not very green. It's completely wasteful. In other words, it can't happen. So that's why I say it's not sustainable. It's going to hit a wall. Non-regulated, I don't have to remind you of all the frauds, new ones popping up every day. It's not just exchanges. How do exchanges work? I want to go to a Bitcoin exchange. Well, you got to go and you got to open an account, just like Merrill Lynch or Charles Schwab, right? So, or Toronto Dominion. So you go, you give me your name, your address, your social security number, your bank wire information, give them all that information, and then send them dollars. And they say, okay, you got some Bitcoin, here's your confirmation. Really? How do I know you didn't just take my dollars and send me a phony baloney confirmation? How do I know you're not, a Ponzi? You're using new money to pay off the old money. How do I know you're not Bernie Madoff with a computer engineering degree? How do I know you're not a bucket shop? How do I know any of those things? The answer is you don't. So good luck with that. Not to mention Bitcoin whales. They estimate there are 1,000 people who control 40% of the Bitcoin. Now you got millennials buying, 1/100th of a Bitcoin for, $10 or whatever the math is, $100. But you got these, I call them the whales, these 1,000 people who have 40% of all the Bitcoin. You don't think they have a big vested interest in keeping the price up? And you don't think they wash trade, do wash sales? So A sells to B for 10,000, B sells back for 11,000, A sells back for 12,000, B sells back for 13,000. This is called painting the tape. It's the oldest trick in the book. And there's no profit and loss because we're selling the same Bitcoin back and forth. But what we are doing is creating a ticker that gets the millennials, I shouldn't pick up millennials, 3 millennial children, but gets people all over the world, maybe a garage mechanic in South Korea took out a home equity loan or hawked his inventory, put his entire life savings into Bitcoin, and has now been wiped out and is desperate and suicidal. That's what's going on. It's basically rich people stealing from the poor. Not a good business model, in my view. And then finally, there's no use case other than criminals, terrorists, or tax evaders. Why is Bitcoin better than Visa unless you're a criminal? Now, if you're a criminal, I get it. If you're buying child pornography, you want to use the dark web and use some cryptos and all that. If you try doing that with Visa, you'll probably get a call from the FBI. So I understand why it's good for criminals, but if you're not a criminal, if you're not a tax evader, if you're not buying child pornography, if you're not an arms dealer, if you're not a terrorist, then why is Bitcoin better than Visa? There's really no use case for it other than crime. And then it's not elastic. And this is important because there's a finite number of Bitcoins, 21 million Bitcoin. They're getting closer to that level every day. And everyone's like, this is a good thing because, the problem with central banks is they print all this money and we're going to have inflation. By the way, we haven't had any inflation for the last 8 years. Separate issue. I'll come to that if we don't run out of time. But, we hate central banks. They print too much money, blah, blah, blah. So we're going to cap the number of Bitcoin. But money supply has to be elastic. It can't be too elastic. The problem with central bank money is that it's too elastic. The reason, by the way, gold is such a good form of money is that it grows slowly. It grows at about the tempo of world growth. It grows at about the tempo of population growth. Not exactly, but close enough that it's the best form of money anyone's ever discovered. But the problem with Bitcoin, when you hit a hard stop, which they will, and the economy keeps growing, but you want to back it with Bitcoin, so here's your money supply and here's your economy, that's inherently deflationary, right? Because each Bitcoin's got to support more and more growth, meaning your Bitcoin is worth more in theory, but the problem is you never get there. Why? Because if you have a deflationary currency, there's no bond market. The money supply grows based on credit, based on loans, based on various forms of borrowing. The money supply is just a foundation, and the economy grows with credit. Nobody wants to borrow in a form of money that's going to be more expensive when you pay it back. I'm not talking about interest. That's always part of the equation. I'm saying the money itself is worth more when you have to pay back the loan. No one's going to borrow on that loan, therefore no bond market, therefore no viable form of money. So these are all the reasons why this is going to hit the wall.